2021 was a stellar year for the stock market. It was full of drama, meme stocks, and yes, unfortunately, more COVID. But despite all of that, the S&P hit record high after record high all year long. So, can we expect more of the same in 2022, or is there a crash on the horizon? Well, today we're going to get into all of that, and stick around to the end of the video as I will give you 3 stocks that I think are worth taking a look at for the coming year. And before we get into that, be sure to do me a solid and hit that thumbs up so the YouTube gods will shine down on this channel. So let's answer the first question. Is the stock market crashing in 2022? You know, I made a video in the early part of 2021 and explained why I didn't think we would see a crash this year, and surprisingly, it wasn't really received all that well, despite the fact that I was actually right. Like, do people love bad news that much that we're actually rooting for the stock market to crash? Why do I get the feeling that the Overs Club just is no longer cool? Nevertheless, the Bulls clearly won this year out, and I do think we see more of that happening in 2022, but there is a caveat to this. It has everything to do with good old Uncle Jay and the Fed. And the dynamic here has some similarities with what we saw in 2018. You see, GDP, or gross domestic product, is a metric that economists use to measure the health of the economy. And in 2018, it was a phenomenal year. GDP rose 5.4% from the year prior to reveal a 3% real GDP. That's a number we saw only one other time since 2005. Unemployment was extremely low at the time, and consumers were spending the money that they were earning like crazy. But with numbers like that come fears of inflation or the economy running too hot. So, what did Uncle Jay do? They raised rates. Not 1, not 2, but 4 times that year. A 2.5% interest rate is what it amounted to, and that 4th time was the straw that broke the S&P's back. The stock market went into not a crash, but a really steep correction. People just were not happy despite how well the economy was doing. And that is kind of one of those things where people get confused about the stock market and the economy and how they don't actually always work together. Anyway, the interest rate hikes were just too much for the market to overcome in that 4th quarter, and the S&P actually ended the year red. I think that we could be in for another similar ride this year, but the outcome might be different towards the end of 2022. With COVID variants becoming less and less deadly and people getting on with their lives, there hasn't been a need to continue to stimulate the economy in the fashion in which the Fed has been doing. This has been in the form of bond purchases. The Federal Reserve will buy bonds as needed to calm the markets and will buy corporate debt in a series of emergency lending programs. Sometimes people refer to these as junk bonds. If the Fed buys bonds in the open market, it increases money supply in the economy by swapping out bonds in exchange for cash. Hence maybe why you've seen some of the various memes of Jay Powell and his broken money printer just spewing cash everywhere. But all that is about to stop. Earlier in December, Jay Powell announced that he will be gradually slowing the purchases of these bonds in what's called a taper. The Fed will taper these purchases over the next 3 months and will completely stop injecting cash into the markets by the end of 2022. Now, I want to pause here because this is a good thing if you're looking at the economy and just how healthy things have become since the beginning of the pandemic. However, this may mean that we could see some volatility in stock. If we look back at the last time we saw a tapering of bond purchases, then Fed Chair Ben Bernanke announced tapering after the markets recovered from the Great Recession of 2008 and the stock market freaked out. This is what's commonly known as, and you might have heard of this, the taper tantrum, and that's what happened in 2013. The stock market lost its mind in that short period of time, but everybody got over themselves and the markets were just fine. It actually ended the year green. What's different about this time, though, is that good old Uncle Jay seems to have learned from his predecessors and himself and has completely been transparent about the taper and the raising of rates. I actually don't think we see the type of interest rate hikes that we saw in 2018 like some might actually think. Most think that we're going to see 3 interest rate hikes immediately after the taper, and I just don't know if we actually see that take place. I think we have actually seen the peak of inflation this year, and we could see Jay Powell take a little bit of a softer approach. The 5-year break-even rate has steadily fallen since peaking at 3.17% in November. That inflation rate is what measures Treasury yields to gauge whether investors expect inflation to be in the next 5 years. That's at 2.69% just as of last week. Why might this be? My theory is that much of this inflation has come from supply chain issues which are reportedly easing, especially now that we are through the holiday season. Now, having said all this, the market will still likely respond to the taper and the potential rate hikes, and we may indeed see some volatility in the earlier parts of this year, but like in previous years, the market will get over itself and realize just how healthy the economy is. And remember the taper tantrum of 2013 that I spoke about? The S&P returned 30% that year. And this isn't to say that the exact same thing is going to happen this year, but I do think that 2022 will be another green year regardless, and there's little to worry about just given the health of the economy that we're seeing. Now, with the market shifting here a little bit as far as the health of the economy is concerned, it'll be really important to know what types of stocks to be in for the coming year. If rates go up, and all signs are pointing to that they will to some extent, you may want to consider staying away from stocks that report negative earnings and have sky-high valuations like we've seen over the last 18 to 24 months. This means that some of the crazy high EV or tech stocks that make zero profit may be the most sensitive to this environment we're about to get ourselves into. So, which stocks are worth taking a look at? Well, the first stock that I think that should be in everybody's portfolio and will still do well no matter what environment we're in will be none other than Apple. I know this is an obvious one, but some people still overlook this. I don't understand. Is it a growth stock? Is it a value stock? Some call it both, but either way, this company isn't going anywhere. Demand for new iPhones is still insane, and the services side of their business is going nuts. Profit margins on their hardware side alone is at 50%, and this is still cheap when you consider that they're trading around just 30 times next year's earnings. Apple has an average annual return of 30% over the last decade, and I don't see that slowing down anytime soon. Second is going to be one you may or may not have thought about before, and that's Boeing. Boeing has really struggled since the pandemic, and you can cite many reasons as to why. Not only were they dealing with COVID like everybody else, but they had malfunctions with the 737 MAXs, which caused a ton of problems. And they really just could never get their balance sheet right either. They reported losses again in the third quarter of this year, so why am I looking to buy it for 2022? Boeing has finally started to get themselves back on track, and with more orders coming in for more planes, the company can finally get back on solid footing. They have projected that they will increase production on their MAX jets by 50% by the end of next year. Not only that, but airlines are under a lot of pressure to upgrade their planes to be more efficient and higher tech as well. Boeing is always going to be the first choice between the duopoly that consists of them and only Airbus. I really like the upside here, and I think that they shine in 2022. Next is going to be Ford, and listen to me when I say this. I know that these three stocks might not be the most sexy ones you've ever seen. They're not going to be your meme type stocks. They're not going to go parabolic, but these are solid stocks that I think are going to outperform the market next year. So anyways, we do have Ford here, and I actually think that they could outperform Tesla as a stock this year yet again. Some might not realize that they did that last year. CEO Jim Farley was asked how they plan to keep up with EV giant Tesla and if he ever thought they could pass them in EV sales. His response? Jim stated that he's a race car driver and second place is just the first loser. So if you're not first, you're last, I guess. Either way, I love the optimism here and he's really not messing around. Jim Farley has confirmed the doubling of the F-150 Lightning's production and plans to produce 50,000 units of the EV version of its best-selling truck in the world by 2023. Not only that, but the Mach-E has also been selling like crazy and outsold the Model S in Q1 of this year, and they just started selling them in China, which likely will rival NIO and Tesla in that region. Now, I'm not here to claim that Ford will overtake Tesla, okay? I'm not Jim Farley. But when you look at the other EV companies and their lofty valuations, Ford is stupid cheap here as it trades just 10 times next year's earnings when you compare it to other EV companies that have either sold zero cars or perhaps just a small handful. I probably could name them all on two hands. Either way, let me know what you think about 2022 and what it'll bring, along with what stocks you have your eye on. Let me know in the comments below. Also, click on one of these videos to continue owning that chaos, and I'll see you in the next one.